All right, everybody, Fed meeting. The Fed meeting has concluded. Wow, with such a big outcome. No, I'm just kidding. Actually, there was a little bit of a change, but it was a change that was mostly expected. The Fed made a small change in its language. It went from saying they were going to be patient with respect to any changes in policy to saying now they will do whatever is appropriate to sustain the expansion. And this is what the market was looking for. This word patient was dropped, and instead they said they'll take whatever appropriate action is necessary to sustain the expansion. So hint, hint, that was kind of like a suggestion that, hey, if we need to cut interest rates, we're going to cut interest rates. Now, we know the bond market has been pricing in at least 2 rate cuts. What's interesting is still, I find that nobody has connected the dots with the understanding or being able to see the connection between the debt ceiling, which has put a limit, a ceiling, right, on the ability of the Treasury to sell securities, to sell bonds. So it has created a supply shortage. And I've explained to you many times how the action of the Fed in reducing bank reserves, now this has been ongoing now since December 2017, but we've really seen recently a pretty sharp acceleration in the decline in bank reserves, although we had it popping a little bit back up recently, but they were down to 1.4 trillion. They're up to 1.6 trillion, but remember, they were 2.4 trillion a year and a half ago. So this decline in bank reserves, and remember, reserves are assets of banks. That draining of the assets, the banks have moved to replace those assets, and reserves are tier 1 assets. They're non-risk assets. They're the safest assets. So the banks have, they've been replacing those lost assets with treasuries now, and they have to do that at least to a certain extent to meet stress test requirements. So the loss of those reserves has forced the banks into buying more treasuries, and you can see it very clearly in the data on treasury holdings by commercial banks. Just been going up and up and up. But now there is a shortage because of the debt ceiling. The government cannot sell any more bonds, so it has created this artificial shortage of this very important asset that the banks need. Now, I mentioned, or I keep saying that I find it very odd that nobody has been able to connect the dots here. And they all think that this is some kind of a forecast of a recession. As a matter of fact, another indication of how recession seems so out of the picture is today in the EIA, the Energy Information Administration's weekly report, their release on the petroleum status report on the oil market. Gasoline demand in the latest week was at an all-time record high. If the economy is weak, you would not see gasoline demand at an all-time record high. And by the way, I sent out my full analysis on that EIA report, as I do every Wednesday when it comes out. There's a lot of information in there, and I told my zombie traders, the zombie trading, which is my Forex, daily Forex signal service, to buy Canadian dollar. That is short dollar Canada or buy Canada yen. And those pairs had big moves today. So cha-ching, cha-ching from my zombie trading subscribers. They made some really good money today on that move. So again, you see record gasoline demand and distillate demand, which is diesel fuel, also very, very strong. No indication in those things, and I've been giving you all kinds of other evidence of the strength in the economy, from tax receipts to unemployment benefits being paid out going way down to food stamp use going way down year over year, this sort of stuff. Record fiscal expansion. And by the way, it's always comical to me. It's funny because I tell my people, my subscribers, this stuff. I give them the information, and then like days or weeks or even sometimes months later, it comes out in the media or from Wall Street, the big shots on Wall Street. Hey, record fiscal expansion. We already knew this. We know this before everybody else because I know what data to look at. I look at all this stuff through the prism of MMT understanding, which gives me better insight and understanding. So we're way ahead. This is like having inside information, but it's totally legal. It's just better knowledge, better understanding, better information, better data. You're not going to get this anywhere else. You're not even going to get this from the other MMT people. There's one guy, very, very famous guy, who's been bearish for 5 years, 4 or 5 years now. I mean, almost like he totally ignores his own MMT understandings. So I don't know, but my stuff, not right on the money, right ahead of the money. So that's what happened today. The Fed changed, and by the way, before the Fed decision this afternoon, I sent out an email and I said, look, if they come out and if they take that word patient out, you're going to get a rally in stocks, you're going to get a rally in bonds, you're going to get a rally in gold, and you're going to get the dollar selling off. And all 4 of those things happen. So if you were a short-term trader, if you had my stuff, you made money today just based on that one event, the Fed. I mean, that's what it boils down to. Better understanding, better information. But, and this is the thing, and I keep talking about this. Right now, we are in this kind of a weird environment, which is really all about the debt ceiling and the inability of the Treasury to sell more bonds that are needed worldwide as the most important collateral that exists in the world right now. There is a blockage on the ability to sell more bonds, and it is affecting and distorting everything. Now, if you understand this as I do, you know the truth of what's going on and what the implications are. If you don't understand this as I do, you think this is a recession indication, which it is not. So again, better understanding, better information, better data, blah, 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 blah. That's what it boils down to. That's exactly what it boils down to. So that was the big event today, the Fed meeting. They took the word patient out. The debt ceiling situation is something I am monitoring right now. The White House and Democratic leadership, they are meeting this week. As a matter of fact, I think today is when they sit down to meet to discuss a spending bill. And the spending bill will deal with the debt ceiling, but both sides are still very far apart. I don't know if it's going to happen. I mean, I do not know if this is going to happen. And we basically have another 6 weeks or so, maybe 2 months maximum. I would say more like 6 weeks, until government goes into technical default. Now remember, the default is ridiculous, it's stupid, simply because it is a self-imposed, this whole debt ceiling nonsense is a self-imposed constraint, it's a political thing. It goes back to the days of the gold standard in the 1930s. We should get it, we should do away with it. Not necessary, don't need it. But don't put it past those imbeciles in Congress or the general public who think, that the government's finances are like their own household finances, which it's not. That's not the case. So you're dealing with massive, massive ignorance here. But I mean, what else is new? Right? All right, everybody, that's it. Remember, if you want any of my reports, go to pitbulleconomics.com. Sign up for MMT Trader, 30-day free trial. Zombie trading. Guys made a lot of money today. get that too. And of course, understanding the daily treasury statement course is there. My Forex trading course is there. And MMT value stock selection. You could get all three at a special price of $295. Go there. pitbulleconomics.com. Bye-bye.